There's no outcome that I can foresee that will be quiet where you can say, oh, well, things are normal, we continue. No, they're not. They're not going to be normal.
This is Elijah K. Johnson with Liberty in Finance, and these are the Miles Franklin weekly specials for August 26th through September 2nd, 2024, while supplies last. First, we have the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated Silver Philharmonics at just $3.10 over spot. Next, we have compelling pricing on various pre-33 American gold coins. For current pricing on these or any of our other products, call 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you. Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Michael Oliver from Momentum Structural Analysis. Michael, thank you so much for joining us today.
Good to be back, Elijah.
Well, it's great to have you today. I was reading your weekend report that people can subscribe to on olivermsa.com, and I would like to discuss what you expect for the stock market and also gold and silver going forward. Now, it seems like there's a divergence between the stock market and gold that you've been noticing, and you expect the stock market to take a beating here, but gold to actually outperform. Can you expand on that?
Well, that's normally been the case, actually, in the past, even during crash events. There's one instance that everybody remembers that was in October of 2008. Stock market had already been going down big time for over a year at that point in time. Gold had been going up for a couple, since 2000 through 2008, and was somewhat overbought then. And so when the stock market finally did have a crash event in a year off of its high in that 2008-9 bear, gold joined in. It joined in for all of about 4 to 6 weeks, where they're going the same way. They weren't going the same way before. And then shortly after that event, stock market continued on down through the first quarter of 2009. And gold was back at its highs by early 2009. So they diverged. But there was that brief instance, and everybody remembers that, at least if you're around then. But if you go back through history and look at even crash events, like I happened to catch the crash in 87 before I set up MSA. I didn't catch it a big way, but I caught it to where it smacked me in the face with realization that, hey, we can measure some of these things, okay? At that point in time, gold went up 9% that was a week or two of that crash. Why? I guess nobody told gold was supposed to go down, when the S&P crashed. But no, it went up anyway. And during the 29 to 32 great bear market, there was no gold futures or freely traded gold then. But Homestake Mining, the biggest gold miner in the world then, had a massive bull market during that huge bear market. Okay, so opposite the stock market. So the attempt to link gold to stocks as a fear element. Yeah, pay attention to it. Yes, if gold were excessively overbought at that point in time, when the stock market decides to really have a puke, then maybe gold will participate to some extent to clean itself up some, or not. So don't think it is a rule carved in gold stone that it must follow the stock market. It certainly doesn't. Okay. Anyway, in the 2007 to 2009 bear trend, stock market down the whole year and a half period, T-bonds and gold went up. From 2000 to 2002 bear market, gold went up, T-bonds went up. Okay. So here we are. I think we're topping out the stock market. Yes, we've taken out the 2022 price highs by about 10% or so in some indices. Some haven't even reached it. And if we roll over here, we think there's triggering factors in the S&P 500 and the NASDAQ 100 that will be engaged in the next quarter. If you merely ooze back down about 5% below where you're trading right now, those indices can't sneeze between now. So if September, for example, unfolds as a wobbly month, and we ooze back down several percent, you'll be in a position via our momentum metrics to trigger a structure, break a structure of support level that suggests you could open the Bombay door. Now, it doesn't have to be a crash. but it's likely to be a very sharp onset of major decline. And I think that the Federal Reserve and the monetary factors around the world will increase dramatically liquidity, artificially low rates. It's all the things they do, and that will benefit gold. So anyway, but we do see the stock market being in a very vulnerable position to where September better not be a wobbly, non-headline, but just wobbly a bit, pull back 3, 4, 5%, because you'll be in a position then to trigger certain momentum factors that say, gone. You'll go down. Anyway, so that's what we see in the stock market. And I think it's likely that those trigger levels will be engaged in the next month after September.
And that is coinciding with the Fed rate cut, or a highly anticipated Fed rate cut. So how do you think that could play into this?
Well, if you go back and look at 2001, in January of 2001, about 4 or 5 months off the high, not far off the price high back then, the Fed cut rates twice that month. Somewhat surprised the market, okay? They cut rates for the next 2 years. It didn't do a bit of good. Stock market collapsed. In fact, when they started cutting rates, if you circled where the S&P was and went short then, it did great, okay? In 2007, 1 month before the high, in fact, about 3 weeks before the traded price high, which occurred in October 2007, the Fed in September 17th, 2007, cut rates by 0.5 basis point, and it was shocking. Nobody expected it. The comments from Wall Street were, "Oh, Christmas time party," et cetera, et cetera. It was a guy getting a present you didn't expect. And all these kind of comments. I went back and I looked through the newspaper archives to see what the Wall Street reaction was. It was total shock. They did not expect it. So the market rallied, priced in the rate cut, rallied for about 3 weeks. That was it. It was all over when we started to collapse. And they cut rates all the way down, and yet the market went down. Okay. And gold went up, and silver and the T-bonds went up all during that time, except for that October event in 2008. This time, it's fully anticipated. There's no surprise about a rate cut. In fact, they told us, Powell effectively said so about the second week of July when he was testifying, that no, their focus now is, they want to get down to 2% rate, inflation rate, but they thought they were on target. And they were now focused on their other mandate, which is economic disturbances, unemployment, et cetera, et cetera. And he says, I don't want to wait for data points to demonstrate that we've made a mistake by staying too high, too long. Meaning he's not even waiting for the data points, he said. So that's a hell of a statement, okay? And yet the market, it dropped a little bit and then it exploded over the last month or two off the July low. The S&P rallied back to its high, and it's probably when they open tomorrow, I bet they nip out the high that was made prior to that. They're just short of it right now. Just to nip out the high so they have a headline. And of course, the market has already priced in the rate cut that's likely to occur in mid-September. So it's not a surprise this time. So once they cut the rates, if you buy then, you're sort of late, aren't you? They already told you they were. And we're suspecting you're getting the rate cut rally right now. And by the time they cut rates, whether it's 25 or 0.5 point, I suspect it's going to be half, but we'll see. The market will, not know what to do and start to roll over. And that's when you get your real pain, is if we get a wobble in September, it puts us in position to trigger stuff in October. Meanwhile, gold has been congested. It ran up to 2450 back in April. Right now, we're only $60 above there right now, 25.10, okay, the front month contract. So gold hasn't really been hot over since April, May, June, July, now August, September. Okay, so 6 months, gold's been steady, mostly sideways, and only recently last month got up above the 2,500 mark. So it's not exactly hot and overdone. It's not like it's been going up for vertically for the last 6 months. It's paused. And I think it's ripe now to engage in a more accelerated upside manner. And we've got some trigger levels that we specify in the weekend report to our subscribers that tell us that this arm wrestling pause that we've had ever since the acceleration surge between March and the April-May high. For silver, it was a May high, much higher than it was in April, whereas gold paused after the April high. Silver went on. But they both have congested and gone into a confusing price chart action, which people think, oh my, it's topping out, or they don't know what's going on. We think it's merely cooling off after a very rapid price surge. And they're now cooled off and ripe to go up again. So I think that's the position of those two core markets. It's basically opposite. In fact, in the weekend report, we showed that since you go back to January this year and plot a gold monthly momentum chart and an S&P monthly momentum chart, they pivoted exactly at opposite months. S&P makes a high, gold makes a low. Gold makes a high, S&P makes a low. Exact same months. So they're total opposites right now. But anyway, I think that's what's setting up is that there's a level of, well, like we got up to 25.45 on the nearby gold recently, last month. You get back up there again, you're going to engage more strongly. Silver is coiled right now between about 29 and 30. Now remember, it made a low in August in the pullback. No, excuse me, in August at 26.50. So we're well off that low. They ran a bunch of sell stops and cleaned it out and then popped back up. You get back over 30 again, which isn't to say anything great because our highs recently have been 32 plus. Okay, but you get back over 30 and silver is going to re-engage out of this congestive confusion. So gold and silver are poised to reignite. Anyway, it's going to be interesting.
And we keep mentioning this when we have you on, but I think it's important to remember how fast silver can move. If we look back at 2011, it was just a couple months and silver was, from $30 all the way to about $50. So if gold continues to move higher here and silver catches up, how fast is silver going to move, do you think?
We can't put a price level on silver, frankly, or on gold, except to say that the bull market in gold over the last 50 years, the bull markets, there were a couple of them, were 8 and 10-fold moves. Go back to mid-1970s to 1980, went from the mid-$30 level to $850, okay? Or from 2000 lows of about $265 gold, and you went to 1920 by 2011 over the next 10 years or so, okay? That's an 8-fold move. Well, we started from a bare low at 1,050. You do the math. Yeah, we're double and a half. Okay, so no comparison in terms of how much multiple gain has gold had so far in this, 9-year-old bull market. So if you use those old metrics and say, well, we can do what we did then, sure you can. The fundamentals are even more dramatic now. Gosh, you can have $8,000 gold. Now, that's not a target. It's just noting past history. And we also note that back in those periods when you in those bull surges, and by the way, I'd comment on that, maybe have an after comment on this. When you ended those bull surges, that last several quarters of the bull market, you went parabolic. Gold went up hundreds of dollars. Silver went from, like you said, 20 to 50 in a matter of, several months. The same was true in 79 to 80. It's also true in mid-2010 through April 2011 for silver. You went absolutely off the page. Right now, silver's, well below those price highs, $50. Why is so? Gold's above those comparable highs. Even copper recently traded over $5, taking out its 2011 high and its 2020 high. And yet silver's still, $30, let's say, it's $20 short of its peaks. Do you think he can't get there and maybe go past it? Well, be reasonable. Maybe silver's just lagged for certain reasons. And once markets like that get shocked into a new reality, they tend to go berserk. And I think that's probably what's going to happen, is that silver's going to vastly outperform gold in the coming months.
What do you think will be the catalyst for this move in silver?
The areas I gave you just a minute ago, the recent high was 24.50 gold, 25.40 gold. You get up 25.40, 25.50, and take out the high we made last month. It's not just because you take out that high, but we've got some momentum trigger levels. Whereas if you looked at a momentum chart, you wouldn't just see a high there, you'd see a ceiling, repeated bumps at a certain level. And when you go through that, it's like it's engaging a structure, is what we call it. And at that point, I think gold will no longer go up modestly versus its April high, but will go up in a more accelerated manner. A lot of people right now are saying, well, gold's overbought. Even gold bulls are saying that. Well, by our metrics, it's not overbought in the least. It's cooled off. You could say that back in April, when we moved up from we had a low this year at 1990 in February, 1992, I think it was, and you ran up to 2450 by April. That's a pretty dramatic surge. So you were overbought then, and you corrected that by cooling off, by going sideways. So we've had a correction that's cooled off all the momentum readings from overbought levels to more normal neutral type levels. So to think that gold is overbought right now, I don't quite know where they come up with that argument. Plus, even on a sentiment basis, we know that individual investors, particularly in the United States, are certainly not involved. There's no fever among investors, especially in the US, about gold whatsoever. In fact, you look at some of the biggest gold miners out there, like Newmont and Agnico Eagle Mining, AEM. AEM's back to its all-time highs. It 2020 high, the 2011 high, and so forth. And it did it rapidly. And if you look at the component of ownership, that's like one of the top blue chip gold miners. Newmont's the biggest one. And Newmont's gone up 60% since February. It's largely due to institutional investors, major portfolio managers who are saying, we need to make some shift out of the stock market, the normal stock market, where the risk is high and the rewards are probably now less, and go to something that has lower risk, higher reward, the gold mining sector. And they're not going to buy juniors. They're going to buy the big blue chips. Well, like AEM, I just discovered the other day, 76% of its ownership is institutional buyers, not individual investors. And I'm sure the same is true with Newmont. We know some big asset managers bought Newmont back in February when it was in the low 30s. Well, they're up 60% right now, 6 months. They're doing pretty well. But it's large institutional investors. The public is not foaming at the mouth about gold. So to argue now that gold is overbought, I don't quite understand, but it's a widespread notion. And it would be a good time, therefore, to prove they're wrong. When the consensus is that, no, it can't keep going up at this rate. I think it can. So I think we're facing an interesting several months ahead.
It definitely will be an interesting several months ahead. And I know you mentioned this last time we had you on, that really going into the election here, there is no good outcome for the markets. Can you expand on that and give us an update on what you're seeing?
Again, MSA we're not going to take sides. We just note what the University of Virginia Department of Politics conducted a poll a year ago, October, about a year ago. And they polled likely Biden voters, likely Trump voters, and asked them a lot of very pregnant questions, telling questions that somewhat overlap so they could validate the one set of answers with another. And that is, if the other side wins, do you think violence is justified? You wouldn't believe the percentages. Like I forgot the exact numbers, like 20, 30% on both sides. Will democracy end if the other side wins? And the numbers were equally high. Would you consider secession if the other side won? And the numbers were very high. This is not normal, okay? It's not a normal outcome. Everybody knows, well, we have a divided nation. Okay, well, what does that mean for the election? Well, it means that no matter who wins, assuming we can decide a winner, which would be interesting in itself, the other side's not going to like it. And are they just going to sit back like they, quote, they normally do after every 4-year election and say, oh, well, congratulations, we'll fight you in Congress, and meanwhile, we're going to beat you in the next election. And so, it sort of goes away, the tension. Or is this different this time? We think it's a lot of difference. And I think that the outcome is not being priced into major asset categories in terms of, what is the disturbance going to mean to institutions, to markets, to expectations? It's not priced in. And I think the closer we get to the election, maybe it'll start to get priced in. For example, I mentioned if we trigger certain levels in the stock market a month or two before the election, and suddenly you get a lot of noise from that market that is unpleasant noise, will that increase that awareness that things aren't going to be normal?
we'll see. But I don't see any outcome, and nor do a lot of other analysts, that it's going to be normal. It's not priced in.
It is interesting when you look at, for example, when Trump was elected in 2016, there were protests across the country. And when, Biden was elected in 2020, you saw protests as well. So it seems like really what you're saying is, regardless, there's going to be, it seems like if we look at past elections, the last two elections, seems like social unrest either way.
Yeah, I think so. And I've told members of my family, and joking watching the news, that if Trump gets elected, within a week of that, there'll have to be military equipment out in front of the White House, tanks, armored vehicles to protect against demonstrations. And I bet there's 500,000 people in the streets. And then last night I saw in the news in Tel Aviv, the protests there was 500,000 people in the streets. And I said, gee, if Israel can get 500,000 people in the streets that are foaming with violence almost, maybe I'm wrong on the 500,000. Maybe it's going to be several million. There's no outcome that I can foresee that will be quiet. And where you can say, oh, well, things are normal, we continue. No, they're not. They're not going to be normal. And again, what does that do to your sense of things continuing as they are, and pricing in your ownership of certain assets, your sense of stability, all these factors that aren't priced into economists or analysts' expectations.
Yeah, it definitely seems like there's things are more divided, and it seems like people see the other party as not just, a disagreement on certain issues, but actually seeing them as the enemy almost. And that's concerning. Yeah.
Yeah, there's no way around it. I see no way around it, that it's going to be copacetic. And I'm not going to define what uncopacetic means. You can use your imagination, and probably it's deuces wild. I don't know. University of Virginia did the study, and their results indicated what I'm just saying. So in effect, I'm just telling you what they said.
And I guess maybe to wrap up, do you have any thoughts? I mean, obviously you're not taking sides in any of this, but do you have any thoughts of how to engage people maybe who disagree with us, how to engage people and not necessarily see them as the enemy, but try to find common ground and maybe, move towards a more unifying country? Your perspective on that?
I don't, there's ways to do that. I mean, as a philosophy background person, and I've written a book on libertarianism, as you know, and years ago. And but I don't allow that to get involved in MSA's analysis. This is a background thing. It doesn't affect our month by month, week by week analysis. But as far as people getting along, yeah, I think you can, but I don't know. Especially if you inject certain other uncertainties into the situation, like instead of a copacetic stock market, you have an uncopacetic stock market, which hurts everybody, especially people that have retirement accounts and are depending on them and maybe drawing money from them as they need it lately. What's that going to do to their fear level, to their, uncertainty level, if that should have a jolt before the election, adding to the sense of confusion, uncertainty? I don't know of any way that can be gotten around. I don't see it. I think there's no way right now that can occur. So it could and should, but that requires intellect, calm notions, and so forth. But again, we have forces at work that are quite unwilling to accommodate. I'm talking on both sides, institutionalized institutions, government institutions that might take any step they need to protect their deep state, et cetera. So again, it's not part of our analysis, just an observation that I don't think is factored into the markets.
And it seems like precious metals are kind of the safe haven, right? That people look to in these times of crisis, these times of division.
Likely that would be. Yeah, I think, you put yourself in that position. I've noticed other things like, one thing that helps silver, I think could really kick it upstairs, that's unique about silver as opposed to gold, is the use of solar panels. There's a company I think called Patriot.com that sells freeze-dried food, especially on the Fox network with ads. They also sell small power generators that are solar panel generated, not gas or anything. And so the demand for this in a period of uncertainty, the demand to have your own power source, for example, could increase. Plus, the sales around the world are going off the page. China produces 80-90% of the photovoltaic cells that are in the solar panels. And while the price of those has come down over the years and demand globally is increasing massively year by year, I'm not talking U.S. necessarily, but Africa and Asia, where you don't necessarily have embedded power lines under your community. You're out in the middle of nowhere and you need some solar panels so you can have your cell phone, which a lot of people have, in parts of the world that didn't used to have it. So demand for that. Well, silver is the essential ingredient of that. It's a huge component now of silver industrial demand every month, every year, and it's increasing exponentially. And that's a factor that could suddenly pinch silver supplies. And it's a factor few are discussing. It's a monetary metal after all, but it does have that other attribute that gold doesn't have, which could cause it to go berserk at some point once the realization hits that we're going to run out of supply because we don't produce enough to meet up with that demand. So there's all kinds of factors there that indicate uncertainty, but it's also something that actually could help boost silver in and of itself.
Well, it definitely will be an interesting time ahead. It'll be great to have you back on to keep us updated. If our viewers are interested in learning more and following your work, they can go to olivermsa.com, get a free sample. Can you tell us a bit about that?
Well, we cover all four major asset categories in our major market reports. Usually get about 5 or 6 a week, including a fairly lengthy weekend report. But I think it's important that any investor now not just look at gold, for example, or look at the stock market. They're bumping into each other. Tectonic plates, icebergs, and they're not going the same way necessarily. It's not like they're all pushing each other along. They could go in opposite directions, and we frankly think that will happen. So it's important, I think, if you're involved in any one of those categories, to pay attention to what's going on in the others, because don't just look out your windshield, look out the side mirrors and see what's going on, because ultimately it's all of those factors that will come into play.
Fantastic. Well, Michael Oliver, really appreciate your time today. Thank you so much, and God bless.
Thank you, Elijah.
This is Elijah K. Johnson with Liberty in Finance, and these are the Miles Franklin weekly specials for August 26th through September 2nd, 2024, while supplies last. First, we have the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated Silver Philharmonics at just $3.10 over spot. Next, we have compelling pricing on various pre-33 American gold coins. For current pricing on these or any of our other products, call 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.